Stocks and gold down on Friday. Stocks really down. The S&P 500 will start off with, as we always do on the weekly chart, down 1.85%. And what, of course, we've seen is a big down week after really, what is that, about 5 weeks of a sideways slide, tending down, and of course really dropping over strongly down over the last week. Price percent oscillator rocketing down. Derivative oscillator still losing downward momentum. But as we go from the weekly to the 2-day, we can see that, again, the prior 2-day chart ended on Wednesday, and the latest 2-day candle ended on Friday. And we had that 2-day crossover that actually charted for us as things closed on Wednesday. And of course, what we've seen happen is that was a green up candle that day. But again, price percent oscillator rotated over. And then, of course, this latest candle, the derivative oscillator rotated over. And now we have both the weekly and the 2-day moving in the same direction, down strongly. So that has restarted after things crossed over back on the 28th 2-day candle. Actually went up for 6 days and then down for 4 days. Up for 2 days, but there was enough momentum to cross that price percent oscillator over. So now we're in the category for potential down plays. On that 4-hour chart, we haven't had that pullback yet. Got close there around when the price percent oscillator started heading up toward the green derivative oscillator that flipped over, but did not cross over and then dropped back off again. So again, to follow our standard rule, we've got to have a pullback. A pullback is completed when you have a crossover going up, when the down direction on your 2-day and your weekly exists. So we haven't had that happen yet, haven't had a safe jumping in point. And again, it has been squirrely, as we can see on that 4-hour chart. Down in the morning on Friday, down again in the afternoon, again down strong 1.85%. So we'll continue to watch things over the course of this next week, see if we have a pullback and another jumping in point for a down move on that 4-hour chart, since the weekly and the 2-day are now moving in the right direction, both moving together. So we go from the 4-hour chart back to the weekly, and we go to the Qs. The NASDAQ 100 down super strong on Friday, 2.43%. Again, a weekly down candle, but a bit of a wick on top as well as a wick on bottom. Overall, not as strong a down movement as we've seen in the S&P 500, even though Friday was a big down day. Derivative oscillators losing downward momentum. That price percent oscillator still heading down quite strongly. We go from the weekly to the 2-day, and of course, it has not crossed over going down yet. That has not happened. So until that occurs, we can't be looking for a down play. Remember, our rule is the weekly and the 2-day have to be moving in the same direction. That has not set up yet. The derivative oscillator's losing upward momentum, hasn't crossed over yet. And of course, we'll wait for, over the course of this next week, to see if the price percent oscillator on the 2-day chart rotates down. And then we go from the 2-day to the 4-hour on the Qs. And of course, we saw things peak out back in the morning of Wednesday the 12th, then slid sideways for 2 4-hour periods, and then of course in the afternoon on Thursday really started that drop into Friday, and that 4-hour chart rocketed over, going down, price percent oscillator rocketing down, and the derivative oscillator also turned negative. And again, would have been nice if that 4-hour or that 2-day chart had rotated over. That would have given us potentially a jumping in point. But you know, we're patient. Remember, we're trend followers. And the first rule, don't lose money. Second rule, make money. You don't make money in the market by losing money, by being stupid. You wait till things line up and work for you. So we go, that's what we'll be looking for over the course of this next week, is to see if indeed that 2-day chart rotates over going down. Back to the weekly, and we go to bonds next. Bonds were the only thing up on Friday, up 0.35%. And of course, we had that weekly vertical crossover in bonds going back to the 30th, the week ending the 30th of November. Of course, 5 weeks of up movement now. These last 2 weeks up quite strongly. This last week, the strongest that we have seen on our chart for the last several months. So again, strong up movement in bonds as stocks, of course, tanking. And what we are looking for also, so that's what we're doing on the weekly. Derivative oscillator gaining upward momentum, price percent oscillator heading up. And of course, what are we seeing on that 2-day chart? Well, it's interesting. Things do look like they're sort of hitting a top somewhere about the 119 mark or so, something along those lines. And again, that's been going on for about 8 days now. And of course, this latest candle, red spinning top, indecision tending down. Things are still moving up, of course. We see that the derivative oscillator has been losing upward momentum the last 6 days, and the price percent oscillator, which is our main oscillator, main indicator, still moving up. So we've got the weekly and the 2-day going up. What do we see on that 4-hour chart? Well, of course, it's crossed over going down. And what are we waiting for? Well, once we see this 4-hour chart, if indeed it does cross back over going up, since the 2-day and the weekly are moving in the same direction, we could have a potential uptrade. So keep your eye over the course of this next week on the 4-hour chart in particular, on TLT. If it crosses over going up, give you a jumping in point for an up move in TLT, a nice practice trade if it happens. Remember, it's all predicated on what the charts do, not what you think the charts will do. So we let the trends guide us. We are trend followers. That is the key to what we do here at Charting Wealth. Okay, go from the 4-hour back to the weekly. And lastly, we go to gold. Gold was down 0.40%. Now, remember, we had a weekly vertical crossover all the way back on the week ending the 5th of October. Went up for 3 weeks, down for 3 weeks, and has been trending up over the last 4 weeks. We had 1 week where we had a doji indecision tending down, but the last 2 weeks, things are up, although topping out somewhere right around the 117 something mark, or 117.50, something like that. We see that the derivative oscillator is about flat. Price percent oscillator still heading up, not as strongly as it was the prior week, but we are in a confirmed up move on the weekly. What are we seeing on the 2-day? Really flat. Price percent oscillator heading down. We have actually a warning candle with that red open box in this last week, a down candle. Wouldn't call it a spinning top, a little bit of up movement there, mostly down. And of course, the price percent oscillator heading down, hasn't crossed over, so still in a confirmed up move. And the derivative oscillator losing momentum. And then we go from the 2-day to the 4-hour. And of course, things crossed over on that 4-hour chart in the morning on Thursday the 13th. So again, what are we looking for in gold? Since gold is both confirmed up on the 2-day and the weekly, if we see this 4-hour chart rotate over going up on gold over the course of this next week, might have a jumping in point there also. So keep your eye on that as well. Hope that you're filling out your weekly market worksheets when you listen to this weekly comprehensive review and forecast. Why? Because it helps you put together your trader's almanac. That, of course, includes your weekly market worksheet, your daily market worksheet, and when you're doing practice trades, your trade worksheet. Where can you get those? They're all for free. You just go to the show notes. If you haven't subscribed to chartingwealth.com, do so at chartingwealth.com. To subscribe to us, and we will send you the daily reviews, the weekly comprehensive review and forecast, and you get special trainings and deals also. Also, if you want to support us, purchase the book, and you can also be a Patreon supporter. God bless, my friends. Thank you for putting up with me and this leg problem I've had. It has been so painful. It has really put me back a little bit in getting my shows out as timely as I have for the last many years, but I have not hurt like this my whole life. I'm getting better. Thank you for your prayers and best wishes. God bless. All the best from the whole team here at Charting Wealth World Headquarters.